how to spot short-term overbought markets and what the qualifiers would be. MMTs were told exactly that in pre-market, and that they would have to see that the reversals would be this to qualify. And it is a beginning stage of a qualifier when you take the last 20-day exhaustion, 20 trading days, with a 2012 calendar bull rally pump right up to the highs, is that eventually, the highs do get exhausted. However, because of the start of the extreme bull trend breakout cycles, is where do they start selling into the news? And we are open right now, 35 minutes, and we've been over the whole thing. And what we said in pre-market is, when do we hit that true imbalance cycle between the buyer and the seller, meaning that the buyers are getting exhausted? Earnings season starts today. The training of what it would look like and why it would have to qualify, and it would have to break this low right there, because that's where the move started. And everything is that when you finally did bounce, you have to have greater movement down at exhaustion price highs. That is, once again, the 36-minute opening bell on the E-mini S&P 500. And once again, from that home plate, is that when the markets do get exhausted, they start to break lower in the E-mini futures on the S&P, and at the same time, you would be looking to see if the VIX fear indicator was rising or not. And the pullback is only a pullback because the short-term exuberances would be verified on reversals, and they have to do this to qualify. And this is on the 30-minute opening bell. We're 7 minutes into the next 30 minutes. But here it is. And do they come back and buy the dip is where they have pulled it back to the major support level, no doubt. If you're going to confirm a short-term overbought market exhaustion gap, then the bigger players would start selling into the news, and you would see it in this type of verification model called reversal verification model. Exhaustion price gets exhausted at the highs, they have to come down, and they're good for trades like that on that intraday level. Then when they do get at the bottom and they want to hold, and they're going to be strong and lever back up, and you're testing the bar right here. Now, let me show you another thing. That's the S&P 500 E-mini. And you always want to be aware of that because it's future behaviors that will occur between the buyers and the sellers. Now, on your NASDAQ 100, look at here. There was another high, 12-year high. Look at here. Look at the support levels, though, from where the breakouts happen, right here. If you're going to verify, you're going to have to break this level, but you're going to have to come down here and break below this number right here. When you break these support levels, the reversal on the opening bell in live equities will have their short-term entry and mathematical reversal and exits and profits. When they do want to hold support, you're going to want to get long. This is a high, and we got right up here. And that's your verifier in stage one. However, you've got to complete it by breaking down and testing where the breakout happened here. Right here. And that's how this reads. And equities will read the same. They'll trade the same. So what you need to know is where the bottom started right here today, and then where the peaks were taken out, and all of this is in pre-market and earnings season, and the whole persona between the public investing crowd and trading community is that they show that they want to get in equities at support level. But in the shorter term, to confirm the top, you cannot see the high for the day. You won't. And should this be the case, then that would be a stage level 1 awareness verification that that turn could possibly be there, and it's always going to be verified with short-term profit taking. Short-term profit taking looks like this. They're selling right now $138 million worth of Apple so I can steal it. Here, they pulled Google back. They're selling 46 million. What can I say? And the S&P 500 is getting some support level. There's nothing weak about any of it, but during a shorter cycle is where that price exhaustion must be verified. And where to buy off the bottom. That was a great shakedown. 431.37 to 428.20 entry, and you're up $1. What can I say? And why is it? Why is it bouncing like that? Because for the people, just remember, it reports earnings next week. We're going to be on Google, IBM. We're going to be looking at Intel, Microsoft, all kinds of things. Within the 30-minute opening bell, you did get a qualifier of profit taking. And not only that, the thing that has to happen is that the bottoms here, we need to break them. And they need to have resistance here. This is your resistance area. They cannot close above it to verify it. You can go up and hit it, but then you come back and you break below this low. Or you shoot right down here to this next level, which is going to be right here. That's where another piece of the breakout, we could take it and cross it that way and say, hey, there it is. Because it is. And you want the trend line to stay as that resistance level. And that they do break the lows to confirm opening bell, profit taking, and how to buy the dip, how to short the top, how to buy the dip,